Gold IRA Withdrawal Rules. Part 2. In Part 1 of this video series, we covered the subject of early withdrawal penalties and the various exceptions to these penalties. If you want to read the full article right now, see the link in the video description. Also, to find out whether your savings are keeping up with the higher cost of living, see the link in the video description to access the free Inflation Retirement Calculator to ensure you are on track. In Part 2, we will discuss mandatory distributions, additional tax implications of Gold IRA withdrawals, and tips and considerations for a smooth Gold IRA withdrawal. Let's dig in. Mandatory distributions. Understanding mandatory distributions is crucial, as you must begin withdrawing funds from your traditional gold individual retirement account at age 72. This rule ensures that after years of tax-deferred growth, the government receives its due taxes on your retirement savings. Unlike Roth Gold IRAs, where contributions are made post-tax, traditional gold IRAs benefit from pre-tax contributions, resulting in different rules for mandatory distributions. The process of determining your required minimum distribution, RMD, is based on a formula that considers your account balance and life expectancy. Your IRA custodian or plan administrator plays a pivotal role in calculating this amount, ensuring you're withdrawing the correct amount annually to comply with IRS regulations. Failure to meet your RMD requirements results in a steep penalty, 25% of the amount that should have been withdrawn. Thus, it's not just about ensuring you have sufficient retirement savings, but also about strategically managing these savings to avoid unnecessary penalties. RMDs from traditional gold IRAs can be taken in cash or through in-kind distributions, where you receive the physical gold equivalent to your RMD value. This flexibility allows for personalization in how you access your retirement funds, keeping in mind the ultimate goal of fulfilling the mandatory distribution requirements set forth by the IRS. As you navigate the complexities of mandatory distributions, it's essential to stay informed and proactive in managing your gold IRA. This entails regular consultations with your IRA custodian and possibly a financial advisor to ensure your retirement strategy remains on track, compliant, and optimized for your financial goals. Tax implications of gold IRA withdrawals. When considering a withdrawal from your gold IRA, it's crucial to grasp the potential tax ramifications that vary depending on the account type you've selected. Here's what you need to know. Traditional gold IRA withdrawals before age 59 and a half are considered non-qualified distributions and are subject to both income tax and a 10% early withdrawal penalty, unless an IRS exception applies. Watch the previous video for this information. See the link in the upper right. Roth Gold IRA withdrawals after age 59 and a half are tax and penalty-free. However, early withdrawals of earnings are subject to taxes and a 10% penalty, with certain exceptions allowing for penalty-free withdrawals. Simplified Employee Pension (SEP) Gold IRA. These accounts follow the same rules as traditional gold IRAs, with penalties for early withdrawals and taxes applied to distributions. Navigating the tax implications of gold IRA withdrawals requires careful consideration of the account type, your age, and the reason for the withdrawal. Whether you're planning a retirement strategy or facing an immediate financial need, understanding these rules can help you avoid unnecessary penalties and optimize your tax situation. Always consider consulting with a tax professional or financial advisor to tailor advice to your specific circumstances. I just want to take a moment to thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Now back to the video. Tips and considerations for a smooth gold IRA withdrawal. Having explored the tax implications of gold IRA withdrawals, let's now focus on strategies to ensure your withdrawal process is as efficient and beneficial as possible. First, it's critical you initiate the distribution phase by submitting a distribution request form to your gold depository. This step is foundational in outlining your preferred method of distribution, whether it be in the form of bullion bars, coins, or liquidated cash. Opting for cash distribution over non-cash deliveries streamlines the process, providing immediate funds and reflecting the current market value of your assets without the waiting period tied to physical possession. For those with a traditional IRA, remember that distributions are taxed based on your income. Therefore, it's imperative to calculate the necessary withdrawal amount to cover any tax liabilities, unless you're settling these taxes separately. Given the mandatory distribution requirements starting at ages 59 and a half, 70 and a half, or 72, depending on your birth year, this planning step cannot be overlooked. Lastly, to sidestep potential fines, Decisively finalize your distribution method after weighing its benefits, especially when filing taxes. If opting for physical gold, consider the implications on your investment's tax-deferred status once it exits the IRA. Thoroughly understanding these facets ensures you're better positioned to manage your distributions effectively, maximizing the benefits of your gold IRA. It goes without saying, when embarking on the path of gold IRA investing, working with a trusted gold IRA company that has a thorough understanding of the IRA withdrawal rules and other tax implications is crucial to safely investing. As you well know, gold IRAs are a tax-advantaged way of buying and owning gold without the stress of dealing with local or online vendors or the need for security and storage in your own home. These companies can provide access to competitive prices, price transparency, a reasonable buyback policy, reliable customer service, and security of your precious metals. However, finding the right gold IRA company for your individual needs is critical. For example, if you require a low investment minimum to start a gold IRA, Birch Gold Group or American Hartford Gold would be two choices to consider. However, if you are a serious high net worth investor who can afford a higher minimum to take advantage of the most competitive gold prices, as well as lifetime customer support, then Augusta Precious Metals would be a good fit. Furthermore, Noble Gold Investments provides gold IRA as well as private investment options for home storage. See the links in the video description to find the right gold IRA company that best serves your needs. To conclude, navigating gold IRA withdrawal rules is key to preserving your wealth without facing hefty penalties or taxes. Always consider early withdrawal penalties and mandatory distribution ages to avoid unnecessary costs. Remember, the tax implications vary, especially between traditional and Roth Gold IRAs. By carefully planning your withdrawals and leveraging exceptions, you can ensure a smoother process. It's about strategic timing and understanding IRS regulations to maximize your retirement savings while maintaining financial security. If you have a minimum of $100K in savings to protect and want to take advantage of the most competitive gold prices, see the link in the video description to attend a free gold investment webinar hosted by Augusta Precious Metals. Reserve your place today. Thank you for watching.